The following video is a summary of a trade that actually qualified to become the trade of the week. First, I would like to begin that this is not a video to brag about how many pits I got. It's basically mostly about how much effort we put in a simple checklist. A very through checklist where we compare price action footprints, the value using the order flow behind it, and market psychology. I know perhaps you've seen this strategy previous videos. Maybe you're wondering whether we are playing the same strategy all over and over again. If that's the question, then my answer will be basically whatever makes you money, whatever makes you trade well. If it continues to play, why not do it all over again and trade it every chance I can get? The whole point about this strategy is to recognize where price action movements will occur. So first, let's review where this trend originates. Previous support, breakdown. For some traders, retail traders, so basically ones with no experience, usually trade this area. Obviously, this was a support area that now, in other words, becomes resistance. So for those that still have in mind for a downtrend perspective, they will actually sell around this price area. Obviously, it happens something way different than what they were expecting. But nonetheless, anyone can have a losing trade. It happens in trading, obviously. But that's not really the issue here. The question is, how can we change our thinking perspective? How can we react to follow the real market trend? Obviously, we have a downtrend. We have a trend line. We have a previous support resistance. How many times are we gonna lose here and perhaps lose here again? Are we looking at the real market trend? Are we looking at what the price, what makes the price tick? Now let's take a look at the order flow, the value analysis, the order flow analysis. Let's keep in mind that in a Forex market, we're limited to the broker's order flow, or the basically what we call the times and sales. So this is the very reason why we use a centralized market or centralized entity, such as the CME, which is the futures market, to correlate with the spot Forex. But using a centralized market, we're not just limited to the broker, but we have every single order that flows around the world in this specific instrument or currency. So let's compare basically the charts. On our left, we have the chart on a spot Forex. In our right, we have basically what is the chart in the futures market also. What we're looking at is the same thing. We're looking at basically the same chart in different markets. That's the reason why we correlate the futures market using in this case the Aussie, with the Aussie dollar to correlate every single trade, and obviously we are able to basically trade from both markets at the same time. So going back to market psychology behind this strategy behind this trade, is that we already have traders, social traders, stepped out from here and also here. And what do we see on the order flow analysis? LightBlue Cid, which is our software, shows buy contracts, an accumulation of those basically stepped out trades that obviously we had to get out on a buy situation. So this is where our entry is actually marked. This basically easy to read order flow software indicates where our trading signal is. So what is our market psychology approach? First, we already know that most of the traders already stepped out. They're not going to think fast enough to change their minds into a buy situation. In this case, we already have our first entry based on the accumulation of buying contracts by LightBlue Cid, and then we have our second entry, which is more accumulation of those buying contracts. So what exactly does this create? Basically creates a thin market approach, a thin market depth. And that's the very reason why this trade was very successful. It definitely reached our target by showing us a strength in the print by using our LightBlue Cid software. So in summary, this market approach is a combination of certain factors, such as the price action footprints, our tick-by-tick value analysis, and market psychology. So avoid the traps. Keep in mind a good flow of trading and always try to recognize the real market trend.